Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, February 16th, and the time right now, well, it's 6:10 p.m. Central Time, and the year's 2021. I didn't put that in the right sequence. Little profit taking hitting in stock indices. You know, we did go up. We made new highs in a bunch of them, and they're turning around. I hate when we get these days off, like on a President's Day, because you're combining 2 days worth of data into one. The chart action, the way that the Globex works, it takes the Sunday evening session, the Monday morning session, because you close at noon. When you reopen on the evening session on Monday, everything becomes one bar for Tuesday. So if you're looking for different days, they won't be there on your charts. That's how the industry works. On the energy markets, well, I think you're getting up to a point where you've built in so much bullish news. You've got to be considering that if I'm the Saudis, I'm looking here at Brent at $63. My goal was 70. I have a March 4th OPEC meeting. I've taken a unilateral hit of nearly 1 million barrels a day. Maybe I should be putting out some more oil. That's what I think is going to happen. I think they're going to now turn the spigots gradually on where they allow that to come in. They've got what they want. The COVID cases around the world are, as a whole, petering or petered. And they're starting to drop a bit. More vaccines getting out there. Maybe they've done their job. Obviously, it helps today that the U.S., we've lost 2 million barrels a day of energy because of shut-ins with all that cold weather that I've been telling you about last week, what Chicago is going to get. What went right down to Texas. You see the amount of snow and the freeze that they have? I mean, those people are not equipped like we are here. They're not ready for a cold winter like we are. Things get paralyzed. And those gauges on pipelines, they froze. What about the crude itself? Does it freeze going through the lines? Force majeure is being declared. Serious situation. At the same time, one of the things that seems to be going on in the marketplace is the market's having to adjust to interest rates, doing what I call that creep show. And it's not a horror show yet, but creeping interest rates higher on the back end of the yield. The front end's got a real problem because the Fed is going to get about, I think, $2 trillion, I take it back, from unused money that the Treasury has for the pandemic. And they get that, I think, before the end of March or the beginning of March. I got to look it up. It's a problem. So you're seeing the curve yields do certain things. In other words, front yield, the smaller the interest rate instrument, the lower in time, the yields are falling, back end's going up because the economy's looking better. S&P 500 index, well, you got up here, you're sort of dishing around, nothing a big sign that anything's failed. You closed lower on Tuesday, and we're already in Wednesday session. So from my perspective, we already formed an interim trade top. One day, I admit, you'll say, nah. Let me show you. If we look at the lows, 39.1875, we made a lower low tonight. So the way that I chart and teach it in my charting course, if you ever heard of a window envelope, that's going to form a window envelope up there. Window envelopes looks at what moving averages are doing. This is a swing lines. In order to break the pattern of higher lows, higher highs, you have to take out 38.8450. Where's the support? It should be the 18-day average of closes, and unfortunately, it's well under that number, so it puts the market in risk. I'm going to have what I'll call a resistance point at Tuesday's high, today's high. I don't know if the market's going to get under there, so I want to go look at my, Bollinger Bands. Well, you did not get up to the upper Bollinger Band, so that's still a bullish sign. Didn't quite hit it, but when I put on the window envelope, that was one of the numbers the market did hit, and you're still embedded. Until you get that red line under 80 on a closing basis, actually under 79, the trend of this market via that is still bullish, and I really don't pay that much attention to where the swing line is. This rules the day when momentum takes over trade, and that's what I view it as. We have finished all our PowerPoints now for my enhanced Bollinger Band course. I will begin recording tomorrow. And between tomorrow and Friday, I hope to finish that course up. Doesn't mean it'll be released until after the weekend as I do some editing and look at things, but I think next week will be the release date on that. I'll let you all know. But I still am bullish. Why? This rules the day. Until momentum's lost, the pullbacks in the market, I think the pros view it as buying opportunities. The same thing in the slow stochastics on the NASDAQ. Lose them, I think you go to the 18-day average, both in the S&P and this market. Don't lose them. I view these breaks as where traders that aren't in are saying, oh, that's where I'm going to be buying the market. Whether they look at the slow stochastic or not, it's the momentum of the market that I think gets them going. In the Dow, we've done something of interest here. Let's take off today's action and just go to Tuesday. Both numbers over 80. Both numbers over 80 on Friday and the day before, as you can see. So we're embedded. With the embedded, it joined the parade last week with higher lows, higher highs in an embedded reading. That took over. And in the Russell, I have it. Now, the Russell's now suddenly the one that's starting to get that red line pointing down a bit. That's the one that I think you've got to be the most concerned about. The others look stronger than this for whatever reason. What's the pattern in the chart? Well, if we take a look, because I didn't put it on yet, 2316.90 is the high here. You can see that right above me. And then we come up to today's high, which was lower. We made a higher high, closed lower, and we have not yet taken out yesterday's low, Tuesday's low of, you know, it's so strange because when you do it, when I do this at the time I'm already into the Wednesday trades, but it's Tuesday. And the low of Tuesday was 2261. Take that out and I'll have a pattern of lower highs with higher lows. What would do damage to the chart is taking out 2247.60. That would give you the swing line turning down. Market probably at that point, it's a guess on my part, but an educated one, would lose its embedded reading and could be headed back to the 2200 level. In the VIX cash, all day long I was wondering, why is this market up? Because if you came in this morning, we were up again 100 points in the Dow, and I was watching everything. When it opened, it never backed off. All right? That's important. You have a bearish embedded reading. You've got a funny pattern. You got higher lows, higher highs, so everything's fighting each other right there. Is this a rally in a bear market? And that if you take out 1995, it starts washing out again, and then the stocks go back up? That's what I'll be looking for. So there's a bit of a puzzle on right here. If it does continue rallying until you lose the embedded reading, stiff resistance, 2438 to 2524. In the bond market, back under the lower Bollinger Band. In fact, it's 2 days under it, not embedded, just oversold. Removed today, you've got both numbers here, under 20, but not the day before. So you got to get through today. And this market does pay attention in a nice way. You can get your 4 or 5 days in a row, but it's rare. How low can it go? I don't know. We're coming off unbelievably, a 0.6 on the 10-year yield back then. So the bonds are a little bit different. They're a higher rate. Here you can see 2 days under, just like you're doing in the other market, not trending and certainly just oversold. We get the Fed talking, by the way, I think it's February 23rd. I think I wrote that today. That's when the Senate Banking Committee wants to see the Fed chair for their quarterly reports. Now that we've got the impeachment over, everybody can get back to normal. Higher high, lower low, coming down a little bit there. But this was a breakout. This is all now serious resistance above the market. So whatever the Fed wants to talk, and it can do a lot of talk, it's got to realize this is a big pattern of resistance in the market. The dollar index is getting tossed and turned. Are higher interest rates a sign that the economy might slow down, or is it a sign that we're doing so much better? We got our COVID under condition. If you saw the economic data, it's coming out, it's strong. Why is the dollar down so much? So you're fighting a battle. The resistance, 90.66 right now, take out 90.73.5, and this wave to the downside has ended. Then you go just neutral. In euro, same thing. You're just back and forth fighting. The last break low was 120.87.5. You have not taken it out. Tonight's early low is 120.92. Take it out, you end up with a higher high, lower low. So big battlegrounds in the currencies. These nice rallies, these vertical rallies, well, they haven't produced embedded readings and there are problems with them. British pound is the strongest of this massive currencies. Just keeps coming up. You know, I've heard a lot of talk of the 150 pound. You have an embedded reading. I think you're going to attract buying on the breaks until that disappears. In Bitcoin, you got up today, as you can see, nice and high. If we look at the high that you made intraday on the futures, 51,065. You've backed off $2,000 like nothing. I mean, like nothing. You know, when I was watching the new Ethereum coin come on, it was trading 1,500. It's now pushing, what, 1,800. So what that does with the margins, let's assume it's a 40% margin of the value of the 50 coins. It moves it up where, again, I don't think the average public's going to trade this. I think it's more of an institutional trade because of the size of the margins. And do I think the exchanges are doing right to keep the public out of it? No. They're going to just drive people to doing this with the ETF business and the coin websites, and they'll do all that, and that's what's going to happen, losing a market share. In Brent versus WTI oil, well, you had that big sprint to the upside, falling back a little bit here as we're talking. Why? This morning in my morning subscriber video, and I do those at 5:40 in the morning, told my traders you got to be out of these markets. I don't mind telling you that. Win, lose, or draw, I'll tell you sometimes what I tell them. And we had discussed with them on Friday, market orders coming in. Lucky. Believe me, I lose too. For every winner, there's losers. You do understand that. But I looked at the Bollinger Band and I said, hey, folks, you're there, and here. And this is just what I was telling the traders. Am I still bullish? I am. But I think when you hit a Bollinger Band, my rule is you hit it, you wait for the pullback. In the morning subscriber video, I give you a moving average that is an entry point when you have an embedded reading. I don't show it here. That's in that. Now I've got new rules that come together with all these, with the enhanced Bollinger Band video that I will get finished up this week, I think, and release hopefully next week. But we've got that through there, so I'm looking at how that's doing. This is the March heating oil. It might be time that we move on to the Aprils. The Nat Gas got right up to the upper Bollinger Band top. Let's see how close we got to it. Today you got to 302. The Bollinger Band was 302. So you have to be out of that type of market. 298.30, I think it was. Well, that's the settlement. 302.30. I just wanted to look. So within 0.3, come on. For all purposes, you're there. Overbought. I think pros took some money off the table if they were in on this scenario. What else happened? Look at the 100-day average in the 18. You had a bullish crossover take place when? Not here on Friday, this morning, and the market already went and made a new high. And that's what crossovers often do. They don't have to do it in the same day, but that's what they often do. We have been writing about this unusual weather and the impact on all the markets that it's having. We're talking about the reflation trades in our writings as well at the Linn Group. We're talking about the grains on fire, the copper market on fire, what's going on as interest rates are moving up, and what's the impact of the dollar on all these commodities. So if you're one of these reflation people, as I am, well then we cover these markets, and these are the ones you want to be, if you're a futures trader, looking at. And as we do so, you get to keep up through the weekends, because we do right then. We write through the holidays. We have hedgers that need work, help with it. We do option strategies. You'll see them right there. A lot of data for you. So what do you have to lose by giving it a try? Give my staff a call. They'll work right with you, get you set up. Free trial lasts 2 weeks. You can go to our website under free offers. That's all there as well. If you're a commodity trader, you want to look at other people's information. A lot of charts with what we do as well. I'm Ira. You have a good day.